Welcome back to Valuation Street. Today we're diving deep into the business analysis of a true giant in the technology world, Taiwan Semiconductor Manufacturing Company, or TSMC.
Mm-hmm.
You know their work even if you don't recognize the name.
Mm.
I mean, their chips power everything from your smartphone to the most advanced AI processors out there.
Absolutely. And while many are familiar with the end products, the story of TSMC itself, its strategic evolution, its pivotal role in the global tech landscape offers some really invaluable insights for understanding the modern economy and, crucially, for potential investors.
Right. Our mission today is to unpack exactly that, TSMC's journey, really, from its inception to its current dominance.
Yeah.
We'll be exploring the key business decisions, the technological leaps, and, the unique market forces that have propelled its success. We've gathered a rich set of information to guide us, including a detailed account of the company's origins and its remarkable ascent. Okay. Let's get started.
Okay, let's begin by looking at the man behind TSMC, Morris Chang. Born in China in 1931, his early life was marked by incredible historical shifts. I mean, the Sino-Japanese War, World War II, the Chinese Civil War, all occurred before he even turned 18.
Wow. A tumultuous beginning, to say the least.
Yeah. He then pursued his education in the United States, first at Harvard, then transferred to MIT, where he focused on mechanical engineering.
Which is interesting, right? Mechanical engineering for semiconductors.
Well, exactly. And his early career path led him to Sylvania's nascent semiconductor division. And get this, he worked alongside Don Valentine there.
Don Valentine of Sequoia Capital fame.
The very same. This really places Chang at the very dawn of the semiconductor age. It's incredible context.
It really is.
Precisely. So following his time at Sylvania, a pivotal move came in 1958 when Chang joined Texas Instruments, or TI.
And the timing there is key.
Oh, absolutely key. It coincided almost perfectly with the invention of the integrated circuit, the absolute foundation of modern electronics. And that mechanical engineering background, perhaps surprisingly to some, proved to be a real asset.
It's fascinating how that foundational engineering expertise translated. Tell us about that.
Well, one of his early achievements at TI involved significantly improving the yield of IBM's transistor manufacturing line. He essentially applied principles from mechanical engineering to what was fundamentally a chemical and mechanical process.
Right, bringing a different perspective. It underscores how those problem-solving skills can really transcend specific disciplines.
And it speaks to his intense dedication, too. While fully employed at TI, he also managed to complete a PhD at Stanford.
Get this.
In a mere 2.5 years.
That's just unbelievable focus.
It really is. That kind of focus, that drive, you can see how it would later define his leadership at TSMC.
So his ascent at TI was pretty rapid then.
Very rapid. By 1967, he'd become a general manager, and it was in this role that a really key business strategy emerged. He collaborated with BCG, the Boston Consulting Group, to pioneer the concept of learning curve pricing for integrated circuits.
Okay, learning curve pricing. What's particularly insightful about that for our analysis today?
Well, it's insightful because it was somewhat counterintuitive at the time. Instead of, maximizing immediate profits on new expensive chips, the idea was to price them lower.
Lower, to sell more.
Exactly, to rapidly increase production volume. This increased volume then led to improvements in manufacturing efficiency, better yields, and ultimately allowed TI to capture significant market share.
So it wasn't just a pricing tactic.
Not at all. It was a bold bet on manufacturing efficiency driving market dominance, which, is a core tenet that TSMC would later embody almost perfectly.
And it worked for TI.
Oh, it was a resounding success. This strategy propelled TI's integrated circuit business to become the undisputed leader, both in size and profitability. They even surpassed the companies that had initially pioneered semiconductors.
Wow, so by 1972, he was a vice president at TI.
Yep, overseeing the entire semiconductor division. Looked like he was on track to potentially lead the whole corporation eventually.
But something changed.
Yeah, as often happens in large organizations, right? Strategic realignments shifted his path. In 1978, despite his deep, proven expertise in semiconductors, Chang was moved. They put him in charge of TI's struggling consumer products division.
Consumer products, that seems like a mismatch.
It really was, a market sector where he lacked extensive experience. And, well, despite considerable effort, he wasn't able to replicate his semiconductor success there. This ultimately led to a demotion in 1983. He was given a role that felt like a significant step back after everything he'd achieved.
Ouch.
Yeah. So, at age 52, after 3 decades with TI, he decided to resign.
A 30-year career, ending like that. But his reputation must have still been strong.
Oh, definitely. Despite that shift at TI, his reputation within the semiconductor industry remained highly respected. And this brings us to the genesis of TSMC.
Okay, to the next chapter.
Exactly. In 1985, Chang was recruited to Taiwan. He was asked to lead the Industrial Technology Research Institute, or ITRI.
ITRI. What was that?
Think of ITRI as Taiwan's version of, say, Bell Labs in the U.S., an organization really focused on fostering technological advancement for the country.
Right. And here's where it gets really interesting, particularly from an investment perspective, right?
Absolutely. Chang recognized Taiwan's potential in manufacturing, even though it lagged in other areas, like, say, intellectual property at the time.
Okay.
And he conceived this, well, radical idea. A pure-play foundry.
Pure-play foundry, meaning?
Meaning a company solely dedicated to manufacturing chips for other companies without having its own chip designs at all.
Whoa. Okay, that was radical then.
Oh, completely contrarian.
Yeah.
The prevailing wisdom, famously summarized by Jerry Sanders of AMD.
What did he say?
He said, real men have fabs.
Right. The idea was you had to own your manufacturing.
Exactly. The concept of a company only manufacturing for others was, well, novel. And honestly, initially, the market demand for such a service wasn't entirely clear who would use it.
And funding must have been a challenge.
A significant hurdle, yeah. The Taiwanese government played a crucial role. They became the primary backer, taking a 50% stake.
50%?
Yeah. Philips also invested, took about 28%. And interestingly, Morris Chang himself didn't receive any initial equity in the company.
No equity for the founder.
Yeah.
That really underscores the strategic importance the Taiwanese government placed on this venture, doesn't it?
It really does. It was a national project in many ways. So in his early days, TSMC primarily relied on orders that were essentially leftovers.
Leftovers? Like what?
Cast-offs from the big integrated device manufacturers, the IDMs. You know, chips that the IDMs either didn't have the capacity to produce themselves or, more often, chips that were less profitable for them to manufacture.
Gotcha. So TSMC started by taking on the less glamorous work, you could say.
Pretty much. But Chang had this clear vision. He anticipated the rise of, well, he called them fabulous semiconductor design companies.
Fabulous. That's an interesting term. What exactly does that mean in the semiconductor world?
Good question to clarify. Fabulous here just means fabricationless. So companies that focus only on the design of chips and would need to outsource the actual manufacturing to a dedicated foundry like TSMC.
Okay, fabless. Got it.
Yeah. And Chang's insight came from his time back at TI and also General Instrument. He'd seen many talented IC designers who harbored ambitions of starting their own design businesses.
But they couldn't afford the factory.
Exactly. They were deterred by the enormous capital investment required to build their own chip manufacturing plants, their own fabs, hundreds of millions, even billions of dollars.
Right. So TSMC essentially created a platform for them.
Precisely. By offering specialized manufacturing services, it dramatically lowered the barrier to entry for these chip design companies.
And that spurred innovation.
A whole wave of it. It led to the emergence and rapid growth of companies we all know now, like Qualcomm, Broadcom, Nvidia, all of whom rely heavily on foundries like TSMC.
Okay, so this dynamic created a kind of positive feedback loop.
Absolutely. A powerful virtuous cycle. You often hear it called a flywheel effect.
Right.
As TSMC continuously improved its manufacturing processes and technologies, these fabulous companies could design increasingly sophisticated, higher-performing chips.
Which created more demand for TSMC.
Exactly. Generated greater demand for TSMC's advanced manufacturing capabilities, leading to increased revenue.
Which they reinvested.
Right back into R&D and expanding production capacity. It just kept spinning faster.
And this flywheel, this cycle, it propelled TSMC to the very forefront of technological innovation in chip manufacturing.
It really did. They started as a follower, behind the established players. They gradually caught up around the early 2000s, and then, remarkably, they surpassed them.
The consolidation we've seen since then is pretty striking, isn't it?
Oh, it's dramatic. In the early 2000s, you had something like 22 companies capable of manufacturing at the leading edge.
22?
Yeah. Today, at the 5-nanometer process node, and think of a nanometer as just incredibly tiny, essential for making chips smaller and more powerful. There are only 2 major players left, TSMC and Samsung.
Just 2. And even a giant like Intel has struggled to keep pace.
Intel's struggles have been well documented, yeah. It's incredibly difficult to stay at the absolute cutting edge.
And looking ahead, TSMC is projected to maintain its leadership in the upcoming 3-nanometer process.
That's the projection, potentially widening its lead over Samsung even further. It truly highlights their relentless dedication to pushing the boundaries of manufacturing tech.
Now, a crucial element in understanding TSMC's dominance, especially for investors, is the role of key equipment manufacturers, right? Like ASML.
Oh, absolutely critical.
Yeah.
ASML, founded in part by Philips, which was an early TSMC investor, remember?
Right, the connection there.
ASML is now the sole producer of the most advanced lithography machines. We're talking EUV, extreme ultraviolet lithography.
Explain EUV simply. It's like super precise light etching.
Kind of, yeah. Imagine using an incredibly precise beam of light, way beyond visible light, in the extreme ultraviolet spectrum to etch these unbelievably tiny microscopic circuits onto silicon wafers. ASML is the only company that can build these incredibly complex printers.
And they're essential for the leading-edge chips.
Absolutely essential. You cannot make today's most advanced chips without EUV machines from ASML.
And the complexity and cost. I mean,
staggering. We're talking individual machines costing in the $200, $300 million range.
Million for one machine.
Yep, and requiring multiple Boeing 747s just to transport the components for one machine.
Wow.
And the level of deep technical collaboration, the integration required between TSMC and ASML just to operate and optimize these things, it's extraordinary. It represents a huge barrier to entry for any potential competitor. You can't just buy the machine, you need the know-how.
Decades of know-how.
Exactly. Which brings us to TSMC's current standing. As a dedicated contract manufacturer, they boast really impressive operating margins, around 40%.
40% margins as a manufacturer.
Right. It underscores the immense value and intellectual property that resides within the manufacturing process itself. This isn't just mass production. It's highly specialized tech, decades of accumulated knowledge.
And their spending reflects that commitment. The CapEx plans are huge.
Immense. They announced plans for around $100 billion in investment over just 3 years recently.
$100 billion.
Yeah. This massive capital allocation is strategically aimed purely at maintaining and extending their technological advantage. It just creates this formidable barrier for anyone thinking of challenging them.
So what does their market share look like overall?
Overall foundry market, they command over 50%. But where it really counts, in the most profitable segment, that leading-edge chip manufacturing, they hold over 90% market share.
90%.
Dominant. Utterly dominant. They're often described as the Apple of semiconductors. Not necessarily the largest in terms of total volume of chips, maybe, but the dominant player in the high-end, most technologically advanced, and most profitable segment, just like Apple in smartphones.
That makes sense. And the financial growth.
Remarkable, really. Since their IPO in Taiwan back in '94, we're talking a compound annual revenue growth rate of 17.4% for 27 years.
Wow, sustained growth.
And an internal rate of return, or IRR, on market capitalization growth of nearly 20% over that same period just illustrates incredible long-term value creation.
And that performance has pushed their market cap way up.
Oh, yeah. Propelled them into the top 10 most valuable companies globally. And notably, alongside maybe Saudi Aramco, they're one of the very few trillion-dollar-plus companies not headquartered on the U.S. West Coast.
And there's been a recent shift in pricing strategy, too.
Yes, and this is significant. They seem to be demonstrating considerable pricing power now. They're transitioning away from Morris Chang's earlier strategy of continuous price reductions, which itself was a key innovation, right? Driving adoption.
Right, the learning curve again.
Exactly. But now they're actually raising prices. Projections indicated increases of around 20% this year alone.
20% hikes. That signals real market power.
It absolutely does. Signals their strong market position and just how essential their services have become. Plus, they have substantial cash reserves, currently around $28 billion.
Which they're reinvesting.
Strategically reinvesting right back into R&D and capacity expansion, further widening that technological lead. It's this powerful cycle of innovation, feeding market dominance, feeding more innovation, incredibly difficult for competitors to break.
Okay, now, As potential investors, we absolutely cannot discuss TSMC without addressing the geopolitical context.
No, you can't. It's unavoidable.
The fact that their primary and most advanced manufacturer operations are located in Taiwan, that introduces a considerable geopolitical risk, given the complex and frankly tense relationship with China.
It's arguably the single biggest potential headwind for the company's future. The elephant in the room.
Definitely the elephant in the room. And this geopolitical reality is likely a key factor behind their recent moves towards geographical diversification, right? Building fabs elsewhere.
Almost certainly. They're in the process of building advanced fabrication plants in Arizona, in the U.S., and also in Japan. These moves are likely influenced heavily by government incentives offered by those countries.
And security concerns.
And undeniably geopolitical considerations. Though, interestingly, Morris Chang himself has publicly expressed some skepticism about the long-term business viability and cost-effectiveness of operating leading-edge manufacturing outside Taiwan.
Why? Because of the ecosystem.
Exactly. He cites the deeply established, highly efficient ecosystem, the suppliers, the talent pool, the logistics that's been built up in Taiwan over decades. Hard to replicate that efficiency elsewhere quickly, even with investment.
It really underscores the strategic importance, though, of leading-edge semiconductor manufacturing. It's not just tech, it's global economics, national security, defense.
Absolutely. It's critical infrastructure for the modern world.
So let's try to distill some key lessons here, the broader implications we can glean from TSMC's remarkable journey, especially for business analysis and potential investment. What stands out?
Well, one clear takeaway is the undeniable power of focus and specialization. Their pure-play foundry model, which seemed so unconventional at first.
Right. The real men have fabs thinking.
Exactly. That model proved to be a massive and sustainable competitive advantage over time. Stick to your knitting, basically.
Makes sense. What else?
Another crucial point is the enabling role of fundamental infrastructure. TSMC's very existence acted as a catalyst. It enabled the incredible growth and innovation within that whole fabulous semiconductor design industry.
Creating a symbiotic relationship.
Totally. A relationship benefiting the entire ecosystem. And perhaps most significantly, it highlights the immense difficulty of replicating what you might call process power.
Process power, meaning the manufacturing know-how.
Yeah, but it's more than just know-how. It encompasses the decades of accumulated knowledge, the highly specialized expertise, the deeply entrenched relationships, especially with critical suppliers like ASML we talked about.
Right.
These are incredibly challenging barriers for competitors to overcome, no matter how much capital they throw at the problem. Money alone can't buy that accumulated experience instantly.
It also feels like a compelling, real-world illustration of the innovator's dilemma, doesn't it? You see established players, like Intel perhaps, facing challenges in fully embracing and successfully implementing crucial new technologies like EUV lithography.
Right, which was essential for them to maintain their leading-edge manufacturing position. It's hard for incumbents to disrupt themselves sometimes.
Definitely.
And finally, I think TSMC's story reminds us that even seemingly brilliant, strategically sound business models like the pure-play foundry can initially face real uncertainty. There wasn't a clear, obvious market screaming for it at the very beginning.
So there's an element of timing and maybe even luck.
Astute foresight, certainly, but also good timing, and maybe a degree of luck involved in achieving that kind of transformative success. The conditions had to be right for the fabless model to truly take off.
Okay, so bringing it all together now, what does this all mean for you, the investor, listening today?
Well, TSMC clearly stands as a critical, almost indispensable linchpin in the global technology supply chain.
No doubt.
Its dominant position in leading-edge semiconductor manufacturing provides it with a formidable economic moat. That moat is built on scale economies, superior process technology, and increasingly very high switching costs for its demanding customers like Apple or Nvidia.
The company's long-term financial performance speaks volumes too, providing compelling evidence of enduring value creation over decades.
Absolutely. However, and it's a big however, those geopolitical risks associated with its geographic concentration in Taiwan represent a significant factor. Any prospective investor must carefully evaluate and weigh that risk against the potential rewards.
It's a crucial part of the equation.
It really is. But as technology continues, its relentless march forward, demanding ever more powerful, more sophisticated, integrated circuits for AI, for EVs, for everything, TSMC's role is only likely to become more central and strategically important.
So understanding its history its key strategic decisions, and its unique, powerful position within the global tech ecosystem is absolutely essential for anyone seeking to navigate the complexities of technology investment today and in the future.
Definitely. And look, this deep dive has really only scratched the surface of the intricate and fascinating story of TSMC.
There's always more.
Always more. We'd encourage you to delve further into the nuances of semiconductor manufacturing itself, the dynamic interplay of the fabless foundry model, and, of course, keep a close eye on those significant geopolitical forces at play, which naturally leads to a crucial question for you to consider. What further questions does TSMC's remarkable story raise in your mind? What other angles should be considered? We invite you to continue exploring these vital dynamics that are shaping the future of technology.
Wondering how we quickly synthesize info for this podcast? We use AI. You too can boost your productivity with AI thanks to our sponsor, brainybeapp.com. Get instant answers and insights using top AI models like Google's Gemini, Claude 3, and the latest from ChatGPT. Stuck on a tough calculus problem? Snap a picture for an instant answer from BrainyBee. Need a deeper understanding? Ask BrainyBee for easy step-by-step explanation effortlessly. No subscriptions. AI for business, AI for fun. Skip the subscriptions. BrainyBee is #1.